Welcome to the Daily Business and Finance Show. Government shutdown looms as McCarthy's funding bill fails. Inflation gauge drops below 4% for first time in 2 years. Doe considers $1 billion loan for Lithium Mine. UAW strikes continue at GM and Ford. Walgreens eyes ex-Cigna executive for CEO role. Treasury returns set to have worst month of the year. Nvidia offices raided over suspected anti-competition practices. Stock markets wrap up worst month since December. Stay tuned after the short ad break to get all the details. House Speaker Kevin McCarthy's effort to secure government funding before the end of the fiscal year has been obstructed by staunch Republicans. These Republicans are insisting on comprehensive spending legislation for fiscal 2024 instead. Although the Republican-controlled House has managed to pass 3 appropriations bills that align with conservative demands, the chances of approval in the Democrat-controlled Senate are slim. The proposed temporary funding bill aimed to maintain funding at 2022 levels for a period of 31 days, while also implementing immigration and border security restrictions. McCarthy faces the risk of jeopardizing his position as Speaker if he seeks assistance from Democrats in order to prevent a government shutdown. As a consequence of this development, stock indices experienced a decline.
The Federal Reserve's preferred inflation gauge, core PCE, fell to 3.9% in August, below the 4% threshold for the first time in 2 years. This decline indicates progress towards the Fed's goal of achieving 2% inflation. The 3-month annualized pace of core inflation suggests that the Fed is likely to maintain its current pause in raising interest rates at the November policy meeting. Traders are predicting an 84.6% probability that rates will remain unchanged during this meeting. In terms of economic indicators, personal spending growth decelerated while personal income experienced a slight increase in August. Looking at price changes, goods saw a rise of 0.8%, services increased by 0.2%, food prices also rose by 0.2%, and energy costs surged significantly by 6.1%.
Lithium Americas shares experienced a 2.2% increase on Friday following reports that the U.S. Department of Energy is in discussions to provide a record-breaking $1 billion loan for the Thacker Pass lithium deposit project in Nevada. The Biden administration and Lithium Americas are currently negotiating the terms of this agreement, which would cover more than half of the project's total cost of $2.2 billion. If finalized, this loan would mark the largest ever awarded by the Energy Department's Loan Programs Office to a mining company. The Thacker Pass project holds great promise for lithium production, as it plays a crucial role in manufacturing electric vehicle batteries, solar panels, and wind turbines. This development presents an exciting opportunity for both Lithium Americas and the renewable energy industry as a whole. In addition to these developments, Lithium Americas has also announced that its planned split into 2 publicly traded companies will be completed on October 3rd. Following this milestone, trading will commence on October 4th on both NYSE and Toronto Stock Exchange. These recent updates signify significant progress for Lithium Americas and highlight their growing influence within the energy sector.
The United Auto Workers Union has called for an additional 7,000 members to go on strike, expanding the ongoing strike against General Motors, Ford Motor, and Stellantis. The strike now includes a Ford assembly plant in Chicago and a GM plant in Lansing, Michigan. However, negotiations with Stellantis have made significant progress, sparing them from further strike actions. The union is demanding a 40% pay increase over 4 years and a 32-hour workweek at 40-hour pay. The automakers have offered a 20% pay increase but maintain the 40-hour workweek. President Joe Biden has shown support for the union by deploying officials to assist in negotiations and walking the picket line with UAW workers. Analysts estimate that the UAW can sustain payments to its workers using its reserve fund of approximately $800 million but hope for a resolution within 6 weeks.
Walgreens Boots Alliance is reportedly considering Tim Wentworth, a former executive at Cigna, as its next CEO. This information comes from Bloomberg. While no final decision has been made, Walgreens may still evaluate other candidates for the position. Prior to his potential role at Walgreens, Wentworth served as the leader of Express Scripts until it was acquired by Cigna in 2018. Following the acquisition, he assumed the position of CEO at Cigna's health services organization called Evernorth. Notably, Walgreens recently experienced a 7% decrease in stock value following the unexpected departure of their previous CEO, Rosalind Brewer.
U.S. Treasury returns are experiencing their worst month of the year due to the ongoing bond market sell-off. The 30-year yield has reached its highest level in over a decade, while the 10-year yield has surged to a near 16-year high. This sell-off was initiated by the Federal Reserve's indication that interest rates would remain elevated for an extended period. Billionaire investor Bill Ackman predicts that long-term Treasury yields will continue to rise due to persistently high inflation. Traders are eagerly anticipating the release of the Core Personal Consumption Expenditures Price Index, as it may provide insights into the central bank's future rate trajectory.
French antitrust regulators recently conducted a raid on the offices of chip giant NVIDIA. The purpose of this raid was to investigate suspected anti-competitive practices within the graphics card sector. This investigation was prompted by a report from the regulator regarding competition in the cloud computing market. NVIDIA, known for its powerful chips, has experienced a surge in demand due to the increasing popularity of artificial intelligence. As a result, its market capitalization has exceeded $1 trillion. According to Citigroup's predictions, NVIDIA is expected to dominate over 90% of the AI chip market share as it continues to introduce more advanced versions of its hardware.
U.S. stocks concluded September with a mixed finish, marking the most challenging month for markets since December 2022. The S&P 500 experienced a decline of nearly 5% during September, while all three major Wall Street indices recorded their first quarterly loss in 2023. Concerns regarding a potential government shutdown and the expansion of the United Auto Workers strike overshadowed earlier gains driven by favorable inflation data. The Nasdaq Composite, which is heavily focused on technology stocks, ended slightly higher, whereas the S&P and Dow both declined. Treasury yields were lower overall, and 7 out of 11 S&P sectors finished in negative territory. Notably, Nike's positive earnings results provided a boost to market sentiment.
Thank you for tuning in to the Daily Business and Finance Show. Stay informed, stay inspired, and we'll catch you next time. Goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow dawns, take care and goodbye for now. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.